Bitcoin just broke down the key support level at the 108 and crossed the 50 weekly moving average. Is this the end? We're gonna answer that question today based on the cycles, what liquidity is telling us, hints from the on-chain data, as well as Ethereum, XRP, and Solana. This week, the markets has been reset into the extreme fear level. We still see fear right here because it is still to be updated, but as you can see right here on the chart, I'm pretty sure we are already on the extreme fear level of the fear and greed index. The last time that happened was on April 2025 during the tariffs tantrum. The question that we're gonna answer right now is, are we going to repeat the same pattern, or is this actually the beginning of the bear market? And to answer that question, the first data that we're gonna have to take a look at is our base case. From what we see right here, although we have a deviation from our forecast, we still have until 2026 in order to actually declare the beginning of the bear market. And we must be 100% aware by the fact that time is running out, but we still have some time left. And in order to fulfill the last big peak of the bull run, we need an aggressive uptrend. And if we zoom into the 4-hour time frame, I started to get warning signs when the Bitcoin price crossed below the 108, 106 key support level. And this is such a key support level because we have been holding it as a resistance since the beginning of 2025 until June. As soon as we started July, we had the breakout, and now we are holding this level as a support. So when I noticed that the price crossed below it, this was not good. So the next systematic invalidation that I was looking at was at the 50 weekly moving average. And when we zoom in, what we can see here, guys, is the fact that yes, we crossed the 50 weekly moving average, but we reclaimed the price right after it. And now we are trading above the 100 key psychological level. So I would be extremely concerned if the price crossed below it and stayed ranging below this level, which is not the case. We actually recovered pretty quickly. We should also take into account that we are still on the daily cycle window. And based on the price behavior as of now, this is the current daily cycle low. And due to the fact that we had an aggressive price drop, I actually updated my weekly cycle low from here to here, which is something that I also noticed back on April 2025. The previous weekly cycle low, the price crossed below the 50 weekly moving average and recovered pretty quickly. The same confluence happened with the fear and greed index, in which the got into the extreme fear. It also happened again. So to me, those are actually bullish signs that we still have some price uptrend to go. We should also take into account that the RSI touched the 30 level just like back in April, as we can see right here. Back in April, during the tariff tantrum, we got as low as the 35, maybe 33 level of the RSI. And that's exactly where we also touched this time. And from the DSS, we can see right here that we might actually starting to reverse. This is going to also coincide with the daily cycle window ending. So here's what I have as a conclusion for the price behavior in order to remain bullish. It has to keep trending above the 50 weekly moving average, ideally to the upside. I would start to think about being bearish if that daily candle actually starts to reverse into bearish, and then we start trading below the 50 weekly moving average. So our position right now is to wait and see the price behavior. And like I mentioned in my previous video, another warning sign was the fact that the M2 Global Liquidity Index is actually trending down. And most importantly, the M2 growth and borrowing rate actually had a drop. So in order to maintain this price level, or at least to go back and rise again, we have to have the M2 growth and borrowing rate to rise back up. Over the following days, I would expect some more outflows from the ETFs as well, but bullish signs will start to flash as soon as we get more inflows after the local bottom has been hit. So let's keep an eye on what's gonna be the ETF net inflow. When it comes to potential entries for Bitcoin, I can actually see some order block at this level right here, but still above the 100 level. So after we have aggressive sweeps from the downside, I notice an actual imbalance right here at the 103,500 level, maybe 102,700 level. So I believe the price can back up to grab liquidity to this region right here before we actually continue to go up. And from the liquidation heat map, we can even expect some aggressive liquidity sweep right here on the 100,500 level, which is going to be right below my order block, making it an inducement zone. Ethereum drop was actually not bad compared to Bitcoin. We haven't even crossed the 50 weekly moving average. So we might get a similar behavior back in December 2024 when we actually touched this 50 weekly moving average before the last bull run. Possible entries right here are at the 3,200, 3,300 level. XRP is still trading below the 50 weekly moving average and the 10 daily moving average. Also entering the daily cycle window, so I would expect even more drops for the XRP, because from what I see right here, the DSS is still looking for a bottom. So I would expect the price to drop even further, maybe looking for inducement also below this region right here before continue to the upside. Solana also holding the price above the 155 key support level, however still trading below the 50 weekly moving average and the daily moving average. And from the DSS we can still see that it is still halfway for the bottom, so I would expect the price to drop even more at around this region before continue its way up to recover the price and back and touch the 50 and then daily moving average. But tell me in the comments if you think that this is actually the end of the bull run and the beginning of the bear market. Thanks for watching.